The company made a contribution to the Progressive Electoral Trust of rupees 19.78 crore in the last quarter. So that is a one-time expense that we talked about.
Okay. And secondly, our revenue has grown, but our profitability has been very constant for the last few quarters. So what can be done to increase the profitability in the company?
I'm not sure when you say that our profitability is down or
No, I think it's down. It's just being very stagnant.
Yeah, I mean we have peaked our efficiency, right? EBITDA of 28% plus. Not too many companies in the industry have such EBITDA.
And if you add that one-time expense, I think you can draw a better conclusion in terms of the absolute margin that we would have, grown compared to the previous quarter.
Mm-hmm. And can we also expect some kind of a bonus in time to come or the retail investors?
That is, we have been discussing at the board level as well, and we will, inform, the investors in market once we have a approval from our board. These are items that quickly is discussed. At this point in time, we have nothing to share.
Okay, fine. Thank you and all the best. Thank you so much.
Thank you, Rajesh.
Thank you. The next question is from the line of Ashish Sriram Thavkar from GM Mutual Funds. Please go ahead.
Yeah, thanks for the opportunity. My question was related more so from the GCC angle. So given that every day we are seeing a lot of setups happening in India, and the narrative that they want to do more and more innovation work by themselves, would you like to comment on how that event is going to pan out especially for a company like us? Is there a coexistence thing which is coming into play, or you feel the near term there could be some hiccups?
It's GCCs are both an opportunity as well as a threat, right? It's not that every company, would move all the work to their GCCs, right? Most of our customers have a balance between what they give to their own centers, GCCs, and what they outsource or work with strategic partners like us. So we have not seen a case where 100%, they only work with their own centers and they don't want to work with anybody else. GCCs also is in the same market, right? They also struggle to get resources, to train resources, to keep them, to upskill them and keep them ready and so on. So I think in most of our customer places, even though they have GCCs, they also work with us. So we definitely bring in a certain set of capabilities built over, many years, right? 30 plus years of, history that we have in doing, ER&D business, right? There's not too many companies that have such a, strong domain knowledge and deep history in this domain, right? What is a GCC? GCC is just built by, hiring people, so GCCs take time, you need to build that culture, you need to build that bonding, you need to build, talent base. And so it's very easy to look at GCC and say that, they set up a center and all the work will go there. And practically that doesn't happen.
Yeah, maybe actually I can just add a little bit. This is Nitin. The risks are much higher when you're talking of typical back offices, because what you're doing is you're outsourcing very classical IT work, BPO work, and so on. There, the risk of GCCs taking over what was otherwise done by IT companies is quite high. And engineering is a lot more difficult and a lot more involved. At the same time, I'll also say there is a positive here, which is the fact that GCCs also break down barriers within the organization that you're working with about moving work to India. So in that sense, we also see a positive halo around the fact that, look, the very fact that the leadership is endorsing a GCC also means that there is that much more lesser barriers to outsourcing and offshoring.
And just to take that point forward, you also said that in terms of the skill set that is available, you will be cautious on adding the talent. So whatever we have on our bench, do you think that is sufficient to take care of the growth for the next year?
No, I won't say that. It's not that we are, choking off or stopping hiring. We will still continue to hire on a need basis, right? It's not that, that we have all the capabilities ready for a large deal that comes up or ramp up and so on. We, at any point in time, if any deal comes up, 70, 80, 90%, we would have the capabilities and the resources available. We may still need to go out and add a few people, depending on the technology areas and so on, right? But we will be cautious is the thing. It's not that, I'll go out and add 1,000 people, without that visibility. I'm not going to do that because I already have that bench.
Yeah, that's helpful. Thank you so much, all the best.
Thank you.
Thank you. The next question is from the line of Abhinav Ganeshan from SBI Pension Funds. Please go ahead.
Good evening, sir, and thank you for taking my question. I had just two questions. If I look at your client concentration in top 5 and top 10 versus Q1 FY24, in top 5, we have seen the concentration go up by almost 500 basis points, and top 10 by almost 600 plus basis points. So would this be explained by the larger clients growing faster, or how does this add up? If you could give some color.
It is a mix of, we can't say that it is only due to one customer growing or, it's a mix. Top 10 customers also have a mix of customers, not just only from the automotive industry, from the media industry, as well as the healthcare industry. So there's a mix of customer base in the top 10. And, we've seen, I would say we've seen broad-based growth. Our strategy has been, to really, mine these accounts, deeper, go for new buying centers, build strategic relationship, build deeper relationship with these customers so that we can have a longer term business with them, right? I think that is a strategy that we laid out, not just for the top 10 customers, top 20 customers also. And that is where we are seeing this, positive business growth and, positive outcomes. I think we are comfortable with that situation.
Fair enough, sir. Just a follow-up on that. Now, when I'm looking at your geo mix also, when I look at it same time last year, our America's contribution was around 40%, which is dropped down to 33%, and Europe has gone up from 37% to 42%. So just trying to understand whether European OEM, European transportation businesses have been doing better for us compared to, say, the US telecom and US healthcare. Is the understanding correct?
Yeah. So the transportation business for us is largely driven through Europe customers, whereas our media and telecom and healthcare both are largely dependent on the US market. And if you look at it, both those segments have not been growing aggressively, and that is naturally how our US share is also dipping slightly.
Fair enough, sir. Thank you for the great understanding. All the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Bharat Sheth from Quest Investments. Please go ahead.
Hi, Manoj here. Good evening. Am I audible?
So your line is breaking in between.
No, is it better?
No, you're breaking now.
One second. Now?
Yeah, this is okay.
Is it better?
Yep. Yeah, please go ahead.
Yeah, I have a question on this, particularly on our transportation piece. First is on automotive side, 3-4 years back, EV was a problem, and a lot of investments were going on, and now it is.
Sorry to interrupt, Bharat. So your line is still not clear. So maybe request you disconnect the line and then reconnect it again.
Now is it better? Hello?
Oh, sir, your line is not clear.
So, okay, I'll rejoin.
Thank you so much, sir. The next question is from the line of Manik Taneja from Axis Capital. Please go ahead.
Thank you for the follow-on opportunity. Manoj, just wanted to get your sense with regards to what we've seen in the recent months or quarters, is that a number of traditional IT service companies have made substantial acquisitions on the automotive R&D space. How does that in the competitive industry for you? If you could share your thoughts on that.
No, true. Yeah, we have seen the likes of HCL, Infosys, and so on make large acquisitions. So far, we have not seen an immediate impact in any of our customer base. Also, we understand that a lot of the companies that they've acquired are a lot more in the traditional mechanical engineering space. Not too much of focus or capabilities in new age. Whether it is digital space or the connected car space or the electrification space, right? We don't see any of them. So we are watching the space carefully, but at this point of time, we don't see too much of an impact on our current customers.
Sure. Thank you.
Thank you. The next question is from the line of Bharat Sheth from Quest Investments. Please go ahead, sir.
And good evening. Now is audible?
Your voice is still not clear.
Breaking, sir.
Sorry, I'll be joining later on. Thank
I
you.
request you disconnect the line and then reconnect the call once
Yeah,
again.
sure.
Yeah, thank you. The next question is from the line of Ashwini Kumar Singh from StatPro Fintech Private Limited. Please go ahead.
Hi, thank you for this opportunity. So my question is that in the previous few Concalls, we read that you said that almost 25% of the workforce will be AI ready by Q2 or Q3 of the current financial year. So I'd like to understand, are we on that path or not? And which particular sectors are you looking at in the AI segment, and how it can add to the top line of the company?
Yeah, so we are aggressively working on that, Ashwini, and the target is to have about 25% of our staff trained in these technologies by December, and we have more than 100 POCs across segments, right? Automotive, media and communication, healthcare, as well as there's some very interesting design POCs as well. So it's broad-based across the organization that we are going ahead. We are having some very, very interesting conversations with customers. So it's early days, and as it's not just us, but even for our customers, it's early days. So we're trying to really together figure out the impact of these technologies and what benefits we can bring. So we're pretty excited on this, and that's something that we'll continue to focus on.
Okay. And are we doing something in the semiconductor space?
We don't do directly the semiconductor chip design, but however, in each of our industry verticals, because we are in the embedded space, we definitely need to partner with the major chip companies, build solutions on top of the chips, right? So whether it's on the firmware layer or the application layer, so we have in each vertical we have partnerships with the semiconductor companies. So I think that's our focus, and that's the way that's our strategy.
So the revenues for these should be flowing in from the next financial year.
I would say it is not linked to. Revenues are already there. We have revenues coming in from semiconductor companies as we speak.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Moez Chandani from Ambit. Please go ahead.
Yeah. Hi. Good evening, and thank you for taking my call. I wanted to understand your outlook on utilization. Given that headcount has declined, do you feel the utilization levels right now have peaked, or do you think that there's still more leeway for increasing the utilization, and could that have an impact on margins as well?
Absolutely. Utilization has not peaked at all, right? We have a long way to go, and that is where we are confident that we have enough levers to manage the margins. So that will be the focus in the coming 3 quarters in the year, right? We really need to ramp up our utilization. So as the deals pick up, definitely utilization will also increase.
Right. Thank you.
Thank you. The next question is from the line of Chirag Kacharia from Ashika Institutional Equities. Please go ahead.
Hi. Sir, I have one question on media and communication vertical. So what's the behavior of clients who experience for this vertical during the quarter, and what's the outlook going forward? Because in previous one of the call we mentioned that by end of the year we were expecting that this vertical to bottom out. So is it still intact, or any behavior change you witness even in the 1Q as well? Yeah.
I explained about it in a few questions before. I believe that, look, we have bottomed out and there are some green shoots. There's some, good opportunities that we are chasing. Yes, it's still a tough market. There are still, a lot of M&As going on, a lot of focus on cost reduction. There are a lot of layoffs happening at our customer, places. There's a lot of push towards, best cost locations and offshoring and so on and so forth, right? So having said that, there are some good, large consolidation opportunities and large deals that we are seeing. Of course, it will take, 1 or 2 quarters to fructify and move forward. But I think we are seeing some positive revivals. Plus, we have some good, deal wins, especially with the Neuron platform that we have, launched. So we are really looking at opportunities in 5G and 6G space as well as we speak. So these are all, opportunities for us that can really help this vertical to grow in this financial year.
Okay, all the very best.
Thank you.
Thank you. The next question is from the line of Apurva Prasad from HDFC Securities. Please go ahead.
Thanks for taking my question. Manoj, could you give out how much would be the OEM mix within the transportation in the current quarter?
It would definitely have increased slightly, maybe approximately 60%. You can take? No. More than that? 66. 66. Sorry, I'm mistaken. So this is 66%.
56.
66.
66.
Yeah.
Okay. Got that. And on the healthcare life sciences segment, this delay in renewal, what would you attribute that to by the last customer that you mentioned earlier?
Yeah, Apurva, I'll take that. In this particular case, I think it's simply business challenges at the customer side. So they have had some growth challenges on their own top lines and so on. So there are very specific, I think, CFO-led initiatives to ramp down on costs, which is affecting our R&D programs. So we expect that to be short term, but having said that, we are keeping a close watch.
Right. And would you expect a similar decline next quarter? I'm asking this because I believe last year you added some marquee names in the vertical, and I think that goes along with the ODC setup. So would that sort of offset the impact that you're seeing from this, or this could likely continue for a quarter more?
No, to that extent, ramp-ups that we do in other deals cannot fully make up for what we have here. So that is the expectation that some, if not all of the renewals should come through. And I think that is what we're aiming for. That look, it cannot be 100% pullback of everything, which is okay. As long as we have partial, we should be able to fill up with what we're doing with other customers, some of the great logos that we won, because there is a growth path there, even though typically healthcare is a little bit of a conservative industry. It doesn't kick in too early, too quickly, but there's a good pipeline there, there's a good visibility there. But it is important that, yes, we recover some of the renewals and get them going, even if not all. So that is the only place where there is some dependency, Apurva, to that extent.
Okay. Got it. Thanks a lot.
Yeah, sure.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you, everybody, for attending the investor conference. We really look forward, to talk to you again the next quarter. And we really are, as a management team, we're really focused and keen to continue this, growth path and continue on the recovery in at least in some of the verticals like media and communication. We're fairly confident that we have a good sort of pipeline, and fairly confident that we'll end the financial year positively. So that's something that as a management team we're really, really focused and committed. So thank you again, and look forward to talking to you again next quarter. Bye.
Thank you. On behalf of Tata Elxsi, that concludes this conference. Thank you for joining us. You may now disconnect your lines.